Hi, we're going to be working problem 7-4A from the textbook. It's on page 353, and it's also a problem that we worked in class. We're continuing with this idea that the bank reconciliation is the document we use to help us match the balance that the bank has on the books for cash with the balance we have on our own books for cash. So in order to do this, we start with the balance that the bank says according to their bank statement, and we add anything that we have different on our books that's not on the bank statements, like deposits in transit, outstanding checks, anything errors or anything like that. Then we go with our balance that we have on our books and adjust that balance to what the bank statement says. For example, they may have charged a service fee or collected a note. And once we're done, we should have the same balance according to the bank and our books. And that's our cash balance, our actual cash balance. So in order to do this, we need to be able to figure out what the balances are and what adjustments need to be made. So in this problem, it tells us what the balances are at various stages for the company, and it gives us some items that are on the bank statement but not in our books, and items in our books that aren't on the bank statement, and we need to figure out how to do the adjustments. Alright, so of course the two numbers we're adjusting are the bank statement balance and the cash general ledger account balance. So we need to make sure we have those. So if you read this, the bank statement balance is given, right? You just look at the bank statement and read it, 12,550. But it doesn't, the problem itself doesn't give us the actual balance on the books. What they tell us is the cash account starts out with 12,190. We deposited 28,1. We wrote checks for 33,10. So we need to actually calculate our bank balance at the end of the month that we're going to be adjusting to. So let's do that first, then we'll do our reconciliation. So this is problem 7-4A. Alright, and here is cash on books. And this is a little calculation we're going to do. Of course, in real life, all you'd have to do is go to the general ledger account and look at it. But the point of this is making sure you understand what has happened throughout the month to create that cash balance. We've done debits and credits. We've debited cash whenever we made a deposit, and we credited cash whenever we wrote a check, and there's a balance. But in this case, we're just going to start with our beginning balance plus deposits less checks equals ending balance. So cash August 1 is told to us, it's 12,190. And we need to add any deposits, right? So add deposits. And we deposited 28,1 less checks. So we wrote checks in the amount of 33,010. And I'm just putting parentheses around that so I know I'm taking this, I'm adding this, I'm subtracting that. And my cash on August 31 is 12,190 plus 28,1 minus 33,010 equals 72,80. Alright, so that represents the cash balance on the books at my company, which is FitBike. So FitBike, if you went and looked at the FitBike general ledger account for cash, you would see the balance would be a debit balance of 7,280. And we'll need that in a little while. Alright, so the next thing we're going to do is prepare the bank reconciliation. All right, so when you do the bank reconciliation, you start out with the cash balance according to the bank, and you add anything you know is on your books that's not on the bank statement, subtract anything you know is on your books that's not on the bank statement, and then you've got your adjusted bank balance. All right, so like any statement, we're going to start out with our title, right? So who are we doing this for? The Fit Bike Company. This is the bank reconciliation. And of course the date is August 31, 2014. All right, so the first thing we need, cash balance according to bank statement. And the cash balance according to the bank statement is $12,550. All right, so now we need to add anything that needs to get added. We always add deposits in transit. So deposits in transit are just the items that we know we deposited. They're on our books at the company. FitBike says, hey, we know we made deposit, but maybe it was the last day of the month or Saturday or something. It didn't get on the books yet. So a deposit of $28.80 representing receipts of August 31 had been made too late to get on the bank statement. So that is what we call a deposit in transit. All right, so we're going to add that. And $2,880. And anything else that is not on the bank statement that should be added to the bank statement balance. For example, something like an error or something. So let's look around here. Checks outstanding. Well, that wouldn't get added, right? Outstanding checks get deducted. So we've already done that. B. Bank collected for Fit Bike on a note left for collection. So this is something that's on the bank statement. So we're not going to add or subtract that because anything that the bank knows about, we don't need to add to the bank balance. A check for $580 returned with the statement had been incorrectly charged by the bank. All right, so on our books it's $580, and our books is correct, and the bank says it's $850. So they took too much out of our checking account for that check. So we need to call them up and say, hey, give us back the money. And our books don't need to get adjusted, but the bank balance does because the bank is wrong. So that's an addition to our account because they took out more than what the check was for. Obviously, if they took out less than what the check was for, we would need to subtract that and tell them, hey, go ahead and subtract that out. But this is an error. They took out too much, so they should give it back. And of course, the difference between $580 and $850 is going to be dividable by 9 because, well, that's a transposition. And the difference happens to be $270. All right, so we need to add $270 to the bank balance. Bank error, add $270. And the reason we're adding it is because they took out more than they were supposed to. That means we get that cash back. All right, so that there was a check returned that was bounced check, so that shows on the bank statement. We don't have to adjust it. Bank service charges show on the bank statement. Check returned by the bank, that shows on the bank. So anything that's going to be showing on the bank statement, we don't adjust to the bank's balance because that's already in there. So that's all the additions. All right, so $28.80 plus $270 equals $31.50. So we add deposits in transit and the bank error to the $12,550. We come up with $15.7. All right. And then less outstanding checks, always. There's always going to be a few outstanding checks. And anything else that needs to be subtracted, like if there was an error in the other direction. That wasn't on the bank statement. But all of these other items are on the bank statement. So that's it. So less outstanding checks, which total $74.40, right? $74.40. Got that from there. $15,700 minus $74.40 equals $8,260. All right, so this is the adjusted balance for the bank. So that's what we should come up with when we're done adjusting our books. Okay, so now we sit down and do the same thing and we go, okay, cash ledger account, what is not in our cash ledger account that the bank has reported on the statement? We need to adjust those out. Okay, so we start out with the cash balance according to the company records. And that's what we calculated up here. Our beginning cash plus deposits minus checks that we wrote equals $7,280. And now we need to add anything that the bank, say, collected on our behalf, or anything that we earned in terms of interest, right? So anything we didn't know about, right? So add, so anything that's not in our books, and the bank collected $2,080 for us, right? So the face on the note was $2,000, so it's telling us $2,000 was the note receivable, and $80 was the interest, right? So we'll just add that $280 on. We'll need to keep in mind how to divide that up when we do our adjusting entry. But it's telling us $2,080 cash that's not on our books anywhere. Add note collected by bank, right? Which is 2080. And so if you add 2080 to 7280, you come up with 9360. All right, I'll just put that line there. All right, 9360. All right, and so we did that. A check for $640 had been recorded by FitBank as $460. So here's an error on FitBike's part. So we need to adjust that, right? And bank service charges. All right, so that's some cash that the bank took out that shows on the bank statement. Need to adjust that. And check for $900 was returned. So we'd made a deposit, but whoever wrote us that check was not good, so the check bounced. So we don't have that $900 we thought that we had. All right, so that's the three things we have to deduct. Deduct. Okay, the check for $640. Right, $460. So the check was for payment on the Brown account receivable. So the difference between $640 and $460 is $180. All right, so we have to deduct error in Brown receivable, right? And so that is 180. And there was also bank service charge 20. Bank service charge 20. All right. And 900 that got bounced. Okay, so that's 900 that we need to... Murdoch. Okay, so Murdoch still owes us 900. Alright, so 1A is 200, so that's 1100, right? 200 plus 900 is 1100. Alright, and of course that's a minus. 9360 minus 1100 equals 8260. And, oh great, exactly what we want. They balance. Alright, so we're done with the cash reconciliation. They do balance, and we've adjusted the bank statement with things that we know that weren't on the bank statement, and we've adjusted our books to things that were on the bank statement but not on our books, and they came out equal. So that's great. So the next thing we have to do is journalize the necessary entries. So I'm going to do that on the next video. I'm going to stop this video now, and we'll pick that up with part 2 of problem 7-4A.